This just signaled, and no one noticed.
The Fed is structured as 12 regional Federal Reserve banks. And those regional banks are basically private corporations. And you don't have to take my word for it. There's literally a legal case on it, Lewis against the United States. And the Ninth Circuit Court said they literally ruled that the Fed are, and I quote here, independent, privately owned, and locally controlled corporations. Corporations means companies. So who are the owners? Who own these? Commercial banks. The big member banks own stocks in their regional Feds, and they collect a guaranteed 6% annual dividend. I mean, this sounds like a pretty good investment. I want in on this. 6% guaranteed by law forever. Right? Try getting 6% from your bank. And each Fed bank, is the way it works, has 9 board directors. 6 of those are elected by the banks, the private banks. So when the news tells you the Fed decided to raise rates or the Fed decided to ease policy, guess what? The biggest Wall Street banks literally have seats at that table. They're not lobbying from the outside, trying to influence, dangle jobs in front of them. No. They're literally inside the room. And I'm not saying this is some, villainous conspiracy. There's no smoky room with bald guys stroking cats. We need to bring the cats back, don't we? They will be appearing shortly. Winston, come on up here. Act as a cat. Here we go. So what I'm telling you is that the system is designed to protect the people who own assets. Banks, big institutions, large investors. And the so-called secret plan we're going to talk about benefits one group massively. Asset owners. Guess who owns most of the assets? The same people who sit on the Fed boards. So I'm not judging this morally. I'm a cynic all around, but it's how the machine is built. And once you see it, well, you know something that nobody knows. And it's only if you understand the rules of the game that you can stop being the person it's played on and start being the person who plays it. And in that spirit, let me ask you this. Does it ever seem like Fed decisions, stock price moves are a bit random? Your stock just portfolio bumps up and down a bit randomly? That's actually not true. There is a rule book. There is a set of patterns Wall Street understands that most regular investors have never even heard of. How did I learn this rule book? Well, I was working in an investment bank and I was like, really? This works like that? And I kept learning from my mentors, retired Wall Street goats, the guys who literally move the markets for a living. We literally have 3 market makers on the team. And these are the people who now teach my students one-on-one. It's the real thing. And I'm about to spill those secrets to you, if you wish, in a free live training. No fluff, just the real playbook. You can join me for that. I want to say it's Saturday, 8 p.m. New York time, but I could be slightly off on that. Go to felixfranz.org/training. There's a link down below. And I will literally teach you how these Fed moves move the market and how you can move with it. Because it's actually fairly straightforward, isn't it, Winston? Is it straightforward? Sit down if it's straightforward. There we go. So literally, link down below. It's a free training. If you want to get smarter, you want to feel like you're actually in control, come and join me. Now, there is something else here which is called the Warsh Plan, named after Kevin the Warsh, the man that Trump nominated to be the next Federal Reserve chair. And his confirmation hearing just happened. And there are 4 pieces to what's kind of going viral around this. I'm going to walk you through each one because it's really important to understand this. The 3 pillars that people are throwing around are that he's going to cut rates aggressively. He's going to slash them fast and hard. Piece number 2 is that he's going to shrink the Fed's balance sheet. The Fed currently has about almost $7 trillion in assets, mostly the debt we've been talking about. And Warsh has said he wants to bring that down. And then the piece 3 is, and again, I'm not going to hold you hostage, I'm just going to tell you as quickly as I humanly can for this to make sense, that AI is going to boost productivity, which is going to lower inflation. And then the 4th thing is that there is a May transition date, right? And the way I'm seeing this on social media and it annoys me slightly because it's just wrong. Sit down, Mustafa. Sit. Good boy. It's just wrong is that the moment Walsh comes in, he's going to cut rates, he's going to shrink the balance sheets, and AI is going to save us some inflation. The debt magically is going to become manageable. And people are calling this some sort of secret plan because, framing it that way, well, implies hidden knowledge. So people want to click on it, right? Which is, I suppose, what we do, isn't it? So let's fact check this. Let's fact check this so you guys really understand this.
The next move will change everything.